Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video, I'm going to share with you guys 5 different companies that have increased their dividends recently. Some of the companies I own them, some of them I don't. And if you stay till the end of the video, I'm going to spend up £281, basically spend on different companies, inshallah. I'm going to share that with you at the end of the video. Now, if you know me, you know I love dividend paying companies, especially dividend growth companies. These are companies that have increased their dividend or, have been increasing their dividend for over very long time. And some of them are dividend aristocrats, dividend kings, and so on. And the reason I like them is because I own these stocks. They pay me dividends. They've increased it every single year. I take that money and I reinvest in the portfolio, and that helps me with the compounding effect and so on. So I'm going to share with you guys 5 companies in today's video. I'm going to give you brief information about each one of the companies, and then at the end of the video, I will show you some live buys, inshallah. Before we do all of that, it will be absolutely amazing to help the channel to join us at the Patreon account, where you get access to a lot of things, more than this list. By the way, I'm gonna basically change some of these things because I do include a lot more than basically what is on this list. Okay, it will cost you about 50p per day, and it just definitely helps the channel. Okay, right, so what I'm going to do now is I'm going to share with you guys 5 different companies that have increased their dividends recently, and I'm going to share with you guys a little bit information about each one of the companies. Now, one thing I want you to pay attention to today is the fact that every single one of these companies has a white moat, which is quite important. So the companies with white moat ratings are companies that have a competitive advantage over their competitors. And then we look at the latest increases, how much they've increased, and of course we want to check if these companies are basically Morningstar valuation, fair value, or what it is, and whether they are discounted or not. And the first company that we're looking at today is Broadcom. Broadcom is one of the companies that I own in my portfolio. They have been increasing their dividends for quite some time now, 13 years in a row, and the 5-year growth rate is about 19%. But the recent basically increase was only just 1%. As you know, the company has reported earnings recently, but right now, as you can see here, they're trading $135 per share, and they are fairly valued right now. And when you look at basically things like the 5-year growth in terms of compound annual growth rate for the revenue, for the EPS, for example, the margin of safety, profit margins, return on equity, and return on invested capital, absolutely nothing to worry about. And I like the fact that they have a lot of free cash flow here. And the last 10 years, they've returned to shareholders about 33%. They expect it to grow nicely in the next few years as well. And if we just have a quick look, as you can see, Wall Street is actually saying it's a strong buy right now as we speak. 27 strong buys, 9 buys, 5 holds there. And their price target is basically $192 per share. That's about 41% upside from where we are. If we look at the financials very quickly, you will see this company basically in terms of their revenue. Now, a lot of this comes from acquiring other businesses, so it's not, these massive jumps are not just organic, so they have acquired other businesses. But this is one thing I love about the company. Look at the cost of that revenue. So they made basically in trailing 12 months is about $46.8 billion of total revenue. They spend about 11.8, and basically their gross profit is almost $35 billion. Now, they of course paid some taxes and all sorts of things, and research and development and all of those things, right? And they've basically kept about $5 billion, and that's basically some of the contributes to their excellent free cash flow here. Now, final thing I want to show you about this company is earnings expectations moving forward. Okay, they're expecting the earnings about basically 15%, so that's about 36 analysts, 39 and 24. Now 15%, 27%, 17%, and even if you include this one with 3 analysts here, 23%. So in the next basically until 2027, until 2028, absolutely nothing to worry about. Now with the revenue side of it is more or less also the same as well, 44%, 16%. And a lot of this probably a lot to do with VMware, basically that they've acquired recently. Whatever the reason is, the company has absolutely great future ahead of itself, and we will see what happens. Another one that's in the semiconductors, Lam Research. Now this company has a market cap of $95 billion, and the latest increase was 15%, which is absolutely huge. But look at the 5-year growth rate, that's about 13%. Dividend streak of basically 10 years. and you get $9.20 for every share of this company you own. 66% when it comes to safety, and their revenue in terms of their EPS has been absolutely fine. Profit margin, return on equity, and return on invested capital is excellent. $4.2 billion of free cash flow right now. Total return in the last 10 years 27%, and they're expecting the earnings to grow nicely in the next few years. Is right now fairly valued $820 per share is where they think the price should be. Right now it's $720 per share. Now, according to Wall Street, it is a buy right now, and as you can see here, we've got 16 strong buys, 5 buys, and 11 holds here. We've got 43%, almost 44% upside from where we are. They're expecting the price to be just about $1,000 per share. Now, looking at the financials, okay, again, $5.2 billion to now almost $15 billion. They taken cost of that revenue about $7.8 billion. So they're taking home about $7 billion after they paid a lot of taxes and so on. Their net income as we speak is about $3.8 billion. And as you can see here, they've got $4.2 billion of free cash flow. Now, final thing I want to show you is the earnings expectations moving forward for this company. 18% in terms of the growth on year over year, about 18%, 28%, and then 12% for the next 3 years. And then when it comes to the revenue, 17%, 18%, and 9% almost for the next few years, which is absolutely amazing. So again, nothing to worry about. Great company, increasing that dividend and so on. And then the next one is Intuit, is another one that I own in my portfolio. It is a buy rating right now. It's 15 strong buys, 7 buys, 7 holds, and 1 sell is basically where we are right now. And with regards to the price itself, it's 15% upside from where we are. $715 per share right now in terms of price expectations, where they think the price should be. Now, looking at the financials for this company, as you can see here, from $4.1 billion to $16.2 billion. About spending about $3 billion. They're taking home almost $13 billion, and then after taxes and all those sort of things, then their net income is about almost $3 billion. And as you can see here, the free cash flow right now is about $4.6 billion. Now, in terms of going back here, if I want to basically show you quickly the earnings expectations for this company, as you can see, 14%, 15%, 14%, which is absolutely huge. 12%, 12%, another 12%. So nothing to worry about when it comes to this company. I like the fact that they increased about 16%, which is really good. So that 16% increase for me, that actually I didn't have to do anything. I just bought the stock, I was holding it, and just they gave me 16% upside. Now 14% in the last 5 years, which is absolutely amazing, but it is a little bit expensive right now, about 12% premium, $550 per share is where they think the price should be. You can pause the video and read the rest of the information if you need to, but as you can see here, when it comes to revenue, it's absolutely fine. When it comes to the margins, really good, and then free cash flow, and the last 10 years about 22%, which is absolutely huge when it comes to total returns. Next company is CH Robins Worldwide. Almost $12 billion of free cash flow right now. They have a wide economic moat, $101 per share right now. Dividend yields 2.46% right now, and this is the highest that we've seen so far. The latest increase, the payout ratio is quite high, but the latest increase was just 2%, which is fine. Last 5 years, again, just 5%, 26 years of increasing that dividend. So they are a dividend aristocrat. Aristocrats are companies that have increased that dividend for 25 plus years. Kings are 50 plus years. So you get $2.48 for every share of this company that you own. Safety is just 60, which means below 60 it's not safe anymore. 5 years when it comes to revenue side of it, and when it comes to the EPS is not that great. Profit margin is almost non-existent. Return on equity and return on invested capital is better. In terms of free cash flow, again, this very small company, so it's about just over 300 million free cash flow right now. Total return about 6% in the last 10 years. They expected the earnings to grow nicely, about 13% next few years, and 15% premium right now. $88 per share is where they think the price should be, and right now, as you can see here, is just over $100 per share. Now, looking at Seeking Alpha, it is a hold right now when it comes to Wall Street. So 4 strong buys, 1 buy, 17 holds, 2 sales, and 1 strong sell. And they're expecting the price to decline about 5% from where we are right now. In terms of looking at their financials, you'll see the differences. Okay, now $13.4 billion to $17.4 billion. Look at how much they're spending. This is the difference between technology companies and other companies as well. So 16 billion, they made 17.4, spent about 16.2. They've basically got $1 billion of gross profit after they paid taxes and so on. Basically they've got about 331 million, which kind of is basically where we are right now in terms of their basically in terms of free cash flow. Now earnings expectations moving forward for this company is actually decent, so double digits for the next couple of years, almost double digits in 2026, and then about 1 or basically to 4% every single year for the following 3 years. Now the final company I want to show you is Dover Corporation, and this is a industrial company. They sell all sorts of products and product. $24 billion wide economic mode right now, $178 per share. Price is about dividend yield of 1.17, payout ratio 22%, which is very, very low, but they only increased it by 1%. The last 5 years about 1%, which is not great at all. 68 years of increasing, so they're keeping that dividend going. So because they're dividend king, but it's not a lot. The growth is not there. The annual payout annually, they will give you just over $2. Safety 89%, which is quite high. The 5-year growth rate, and in terms of the compound annual growth rate for the revenue and the EPS, 4%, 9% respectively, and profit margins and return on equity, return on invested capital, absolutely amazing. Nothing to worry about when it comes to that. And $1 billion of free cash flow right now. In terms of total return, basically in the last 10 years, we're looking at about 9%, which is very good. And they're expecting the earnings to grow about 6 to 8% every single year for the next 5 years. Fairly valued right now, $168 per share is where they think they should be. Basically right now is $178 per share. And looking at Wall Street, as you can see, is a buy right now. We've got 8 strong buys, 2 buys, 6 holds, and then no sales at all. 14% upside from where we are. $203 per share right now as we speak. Financially, looking at the revenue side of things, you can see $7.7 billion to $8.5 billion. They spend about $5 billion. They've got about $3.1 billion of gross profit. Then after paying all sorts of things, they've got net income of just $1.5 billion, which is quite really good for a company of this size, about $24 billion. And that's probably what you see there. Now, going back to here, we'll just look at the earnings expectations for this company in the next few years. So 3%, almost 7%, and then 10%, which is really good. And then when it comes to revenue, about 2%, 1%, another 5-6% basically in 2026. So that's the 5 companies I wanted to share with you guys today. And I'm going to show you Sharia compliance side of things, so you can pause the video. Absolutely nothing to worry about. This one here is just the highest. It has the highest interest bearing debt, but the rest of them are absolutely fine. Now, of course, these companies are great, but you of course have to be careful. With this one, for example, I wouldn't actually invest in a company like that. These 2-3 companies are absolutely amazing. This one, if I was just after the dividends, maybe, but not really, not for me either. So the top 3 is probably the ones that I will invest in. I do own actually Broadcom, I do own Intuit, and Lam Research. I've actually missed out when it was trading, I don't know, $300-400 per share, but as you can see, it's fairly valued right now. Now let's go back and do exactly what I said I'm going to do, and that is to basically add to some of the companies that I already own. So I'm gonna buy half a share of MasterCard here. So there we go. So I'm going to buy half a share. Like I said to you guys in the last video, these companies that I'm going to add to today are both is still undervalued. So what I'm going to do, inshallah, moving forward is just to buy regularly as much as I can in the coming weeks. Okay, whether they up or down, I will be buying more. The next one is Salesforce. I'm going to do also half a share. There you go, and send that to the market. I'm not sure what this is, but go away. Okay. There you go. So both of them now, I've added half a share to both companies, and you can see 10.5 shares of this company. Like, I really like both companies. They seem very much undervalued, so I bought a little bit more. And as you can see, there we go. We've basically spent the entire money that we had, 280 something pounds that we've had today. I hope you enjoyed this type of content. If you like the transparency and everything we're doing here, join us in the Patreon account. Let me know if you have any questions. Have a wonderful day. Assalamu Alaikum.